Let's talk about Christmas. The total COMEX delivery notices as of December 26th, or in fact, the end of December, 62,875,000 ounces, record high for December of all time. Now ask yourself, who's taking possession of 62,875,000 ounces? We can look at the January 5th delivery report, where Deutsche Bank, now there's a rumor out there that the European banks are in hot water.
The mining CEO has been in the business for decades, said, hey, I don't know where silver's ceiling is, but he said, I'm pretty positive that it's got a new floor of at least $50 from here. So even people in the industry are, who have been tracking these prices for decades as part of their career of pulling it out of the ground, are basically saying, what, this metal was just structurally underpriced by the market, and that is being corrected now. Now, in terms of how high it can go, he had no idea. This guy also spent a lot of time talking to Eric Sprott, who I'm sure you're familiar with, Andy, and just sort of channeling Eric. Eric is a lot more bullish than he is. He's kind of in your camp, Andy, thinking, hey, this train ends with certainly triple-digit silver, and before the party ends, we could see 200 at some point in there. So anyways, just wanted to share some very recent industry insight that I got here. But to the key point of this discussion here, do you think, let me put it this way, has silver peaked? Did we see the blow off top? Maybe we're going to find some new baseline. Maybe it's 50, maybe it's 60, maybe it's 70. But we're not going to get into triple digits anytime soon. That is the question on people's minds right now. Do you have a strong opinion one way or the other?
I would say to you, we have not come anywhere near peaking. It could be a short-term peak. Look, we've had, within 2 weeks, we've had 2 big margin increases. Now let's talk about what that is first and foremost. The margin increases, especially coming in thin holiday trading, which would amplify it more than anything, is designed, in my mind, to flush the weak hands out. What's more startling to me, and I'll come back to this in a second, is the amount of deliveries that we're seeing, which we're going to talk about. I had lunch the other day with, I don't think there's any problem with me saying this. I had lunch with the owner of the New York Mets the other day, Stevie Cohen, who's a big hedge fund guy. And I went to his house for lunch. He lives very close to me. And interesting man, phenomenally interesting man. We talked baseball the whole time. We talked baseball cards, my baseball cards. We talked baseball cards for an hour. We didn't really talk about economics. The reason I bring it up is he lives in the neighborhood. Mark Wahlberg is his neighbor. Alicia Keys down the street. These houses are $35 to $50 million. Do you think they care what the mortgage rates are? These people come in there and pay cash. Now, what I'm saying is that what the CME did is what they always do by raising margins on December 31st by 30%, and a few weeks earlier by 10 or 15%. It flushes out the weak hands who come in on margin, who wanted to capitalize on a silver market that's moving parabolic. Now, this is easy pickings for the big banks. Forget about the major trend. It has nothing to do with the trend. This is I'm going to scalp you because you think you're smarter than the market is and you're not big enough to play in this sandbox. So here's what we do. All of you who went on margin to buy more silver at leveraged silver in order to make money, we're jacking up the fee, the margin that you have to have within your account. And so we're going to jack it up to a level by where it's going to put some severe pain on your pocketbook. And if you don't pay that margin, if you don't do that right away, why then you are going to have your position liquidated, which happened. And let me see how many. The first time they did it, the amount of, so we saw 13,430 contracts sold in 15 minutes. That was the first one on December 12th.
Wow.
The 26th, they followed up with the second increase. Sorry, I thought it was the December 26th, day after Christmas. And they rose the margin up to $25,000, a $3,000 increase. But you saw huge, in other words, you have to have $25,000 to own a contract in your margin account. And so what happened was all of these contracts got liquidated. Well, who do you think came in there and bought it all? Well, the banks just come in and buy it all, scoop it up on the cheap. It's called shaking the bushes. And it was done magnificently. You could argue that this was textbook. The speculators who come late, who think they're smart, who come in unleveraged, the big houses just shake the bushes real quick, and out comes all of the silver that they get to pick up on the cheap. I don't think it's the top at all. I look instead at one of the biggest anomalies that anyone has ever seen. Let's talk about Christmas. The total COMEX delivery notices as of December 26th, or in fact, the end of December, 62,875,000 ounces, record high for December of all time. Now ask yourself, who's taking possession of 62,875,000 ounces? We can look at the January 5th delivery report where Deutsche Bank, now there's a rumor out there that the European banks are in hot water. Mm-hmm. And I talked with you about this.
Sorry to interject, but you've told us in previous appearances that you believe the U.S. banks, especially the JP Morgans, have flipped from being net short to net long, and the ones that are still sort of stuck long were the European banks. So this
well, that's what the Economic Times said. Now, that was an article, and it's interesting. One of your subscribers, one of your followers sent me an email, said, I can't find it. So he and I go back and forth, and if you put it into Chat GPT or one of the search engines, it says, yes, indeed, this article is real. This article was published. You go to the Economic Times site, it was pulled. It says this is no longer here.
Oh, wow,
interestingly enough. But one of your subscribers and I had a nice conversation back and forth about this, and we validated that it was there, that what I read and what other people talked about was real, and then they pulled it. Anyways, Deutsche Bank on January 5th issued, in other words, they delivered 3.27 million ounces. And who are the buyers? JP Morgan and Citigroup. They are the largest derivatives holders on the market. Now, when I say JP Morgan has flipped, according to the Economic Times, that doesn't mean that they don't have short contracts. They do. Just means that they're net long and exposure to more long than short, which is a big rarity. But the bottom line with all of this is that the deliveries coming by the most sophisticated, well-funded traders in the world who are not using leverage, that is more important than anything. Yes, you can talk about the fact that it has been classified a critical mineral. Huge. You can talk about the fact that the European Union did it at the end of 23. Huge. You can talk about the Chinese export restrictions. Huge. But when the most well-informed traders in the United States are standing for millions and millions and millions and millions and millions of ounces of silver every single month for going on 15 months now, that tells me that we are nowhere near the top. But you have end of quarter, end of month, end of year, selling, balancing books, taking profits. There's something on COMEX that is called Section 1256. Most people haven't heard of it. It basically says if you trade gold or silver futures on a registered exchange like COMEX, that you, no matter how long you hold the trade, it could be a day, it could be a week, it could be minutes or hours. When you sell it, the IRS automatically treats 60% of the gain as long-term, 40% as short-term. And that's a very big deal for active traders, of course. And of course, at the end of the year, the IRS also assumes that all open futures positions are marked to market. So there's a lot of, they can sell it, book it, buy it right back, and it doesn't trigger the wash rule. 30-day wash rule is something in securities that says if you sell a security for a gain, you can't buy it or anything else like it, or a loss, more appropriately, a loss. A very wealthy person sells a a rental property for a big loss to offset a gain on Apple stock or something, you can't buy that or something similar back to it for 31 days. So in any case, all I'm simply saying is that there are a lot of things happening at the end of the year, whether it be shaking the bushes, huge deliveries, rules on COMEX that kind of make traders clean the books and then come back in. And then, of course, we have some other things that we'll get into about silver that I think are going to make this month incredibly volatile. The rebalancing of portfolios where silver has gone up so high, it's now a disproportionate share of portfolios has to be rebalanced. At the same time, you got hedge funds, the January effect, they call it, coming in with all this cash. What are we going to buy? How about the best performing asset of 2025? Now that just got hammered down because of rebalancing, because of all of these things. No, the deliveries expose the rhetoric that these players who are standing for possession of billions every month are not doing this for the hell of it, Adam. It's just beginning. But to think it will be easy is fooling yourself. It will not be easy.
Okay. And by will not be easy, I'm presuming you more mean volatility, which is there's going to be a lot of shaking of the bushes here, and you want to hold on as best you can through it.
Right. The physical holding means nothing. I mean, there's no reason to sell your physical, not even close. But the paper price, which has a lot of speculators involved playing against some of the biggest institutions in the world with unlimited checkbooks, they won't make it easy for those guys and gals to hang on. They're going to get shook, I think, extremely hard over the next couple of weeks into the end of January.